try to get in. And you were in Hong Kong, in fact, trying to get a piece of it, weren't you?
Yeah, I was in HSBC in Hong Kong headquarters yesterday. I was talking to my relationship manager. It's a hot issue, hot baby. And today, there's 160 billion US dollars locked up to buy this IPO. We're talking about 16 times oversubscribed.
That's incredible, but yet there's still a lot of doubts about China's banks. Transparency is an issue. Recently, Ernst & Young had a report that they had to withdraw, suggesting a much higher rate of non-performing loans at Chinese banks than what's been reported. So should would-be investors be wary?
If you look into a foreign company looking at the NPL, all right, if that's a quote, but I can quote from UBS, it's quoting like 5%, and it's coming down 207 to 4%. Of course, the Chinese government has its own rating, but if you want to take a foreign rating, now why not you take UBS as an example versus other audit firm that give a higher NPL?
But the concern is that it is actually much higher than what the Chinese actually reported. Isn't that a concern?
Okay, if you look at Bank of Communication, last year IPO, Construction Bank of China IPO last year. Today, if you own Bank of Communication, you own 100%. And if you buy Construction Bank of China, you get 44% today.
Now, there are suggestions that even though Chinese banks have reduced their bad loans, they haven't quite learnt their lesson yet. Bank of China, for instance, has over 30% of its corporate loans to domestic manufacturers who may potentially default, adding to the problem.
It is listed very clearly in the prospectus of Bank of China, and it is the management to shift away 35% lending to the corporates to more consumer, individuals lending. There are a lot of potential in terms of growth in consumer banking, credit cards, housing loans, and so on and so forth. And we look into asset management, wealth management. These are quite underdeveloped financial services. So I see a lot of potential in Bank of China, for sure.
And Chinese banks are definitely going to have to start getting into shape, aren't they? Because Beijing's made commitments to the WTO that it'll open up China to foreign banks at the end of the year. And that's potentially opening up over $1 trillion worth of personal savings. Will competition be quite cutthroat?
Look, if you talk about local banks, the big fours, definitely they're on the ground. And they have branches. We're talking about thousands and thousands of branches. So I'm sure they're more rooted in they're better positioned than foreign banks coming into China. I mean, no doubt there's competition. But looking at the fundraising they have raised, I'm sure they're going to bring in better management, foreign expertise into managing the Chinese bank. And I'm sure they are well placed to compete with the foreign banks.
Now, the listing from the Industrial and Commercial Bank of China later this year promises to be even bigger. Do you think investors' appetite for Chinese banks will be satiated by then?
I think investors, be it institutional or individuals, and many people in Hong Kong knows that the Chinese government is behind. I think, in a sense, they are the guarantor. They will not let this bank fail.
All right, we'll leave it on that note. Chaw from China Knowledge.